All right. Hey, Wall Street winners. Today is Monday, February the 19th, and in Canada and many provinces, it is Family Day, and in the US, it is President's Day. So the markets are closed today on Monday, February 19th, but they will open and they will be roaring with volatility this week. In fact, I believe this week is probably one of the most risky weeks to have your money in the market. And this is one of the reasons why I believe the strategy around being an active trader is sometimes a lot better than being a long time in the market trader. And the reason for that is because during these periods of extreme volatility, where your holdings, your capital, could certainly go up a significant amount depending on what you're holding, they could also fall and go down quite a substantial amount. And I'm going to say for no good reason, but really just for what's going on in certain stocks in the market. So this week in particular, things to watch out for. We have Walmart and Home Depot, I believe on Tuesday, starting their earnings reporting. So if we go into Walmart and take a look, sure enough, yes, Tuesday the 20th of February is when they report. And not that I'm concerned at all about the earnings from Home Depot or Walmart, but with last week's announcement of CPI and PPI coming in higher than expected, which is likely going to push out rate cuts longer as opposed to sooner, the occurrence of rate cuts being delayed as opposed to being sooner than maybe expected, or as the many traders had thought, hoping for maybe a rate cut in March. Don't think we're going to likely see that. In fact, depending on how data goes, and these were just two data points, so again, minor in the grand scheme of things, but as we get multiple data points, what we could see is a potential rate increase. And a rate increase will do a lot to a lot of different sectors and could kind of derail the upward trajectory of the market. So looking at the results from two big retailers this week on Tuesday, Walmart and Home Depot, this is going to be a good indicator of what's going on. And those will be two to follow. But the big earnings release this week is going to be NVIDIA. And NVIDIA, obviously known as the AI chip maker, it's seen a tremendous amount of growth this year. It's at $726 close on Friday. They've got expectations set that are significantly above what they were in the previous year. And if they don't not only meet, but if they really don't beat those expectations, we could see a decline and certainly a downturn in NVIDIA stock. So this is definitely a risky move. From what I've been reading, this is either going to go up or down $68. That's kind of the average estimate of the movement in this. So this is a stock where if you own it on Tuesday, prior to earnings, end of day Wednesday, you may actually want to trim part of your position and take part of your profits. But if you're positive on this and you're long on this, then maybe now is a time to buy in, because it has seen a bit of a dip down to the mid 720s. If we look at the 1 month chart, it's still way up. It's high 746. So this could be an $800 stock based on what some of the analysts are saying, or an $850 stock. But again, it could come down into the low 600s. So it's a very risky move. And unfortunately, because NVIDIA is so heavily weighted in some of the indexes, if this stock does decline because it only meets expectations and doesn't exceed them, or doesn't have an outgoing forecast that's super positive for 2024 for growth, then we could see a pullback in the greater market, particularly in the NASDAQ, but that will also affect the stocks on the New York Stock Exchange. So this is definitely one to watch for Wednesday. And so I would say be cautious, be risk averse. There's always going to be an entry point for you that will allow you to make money. So if you're up in any of your investments at this point, it might be worthwhile taking some profits prior to Wednesday after market based on what NVIDIA is going to come out with. If you do want to be high risk and roll the dice, if you will, then buying some shares of NVIDIA prior to the release of earnings, it could put you in a very positive position and present an opportunity for a significant percentage increase in gains. But you're also exposing yourself to some very high risk and volatility in that market. Just because earnings are extremely positive in a stock does not mean the stock is going to go up after market and into the next day. We've seen that on numerous occasions with numerous stocks historically. So all of this is about future expectations and what's going to happen in 2024. And what we are seeing is companies like Microsoft and Amazon and Meta and Apple and a number of others are all looking at ways to develop their own AI chips so that they can lessen their dependence on technologies and AI chips designed and developed by NVIDIA. So this is going to be a key week, and those are the things that I would keep an eye out for going into the week. So I wish you all the best in your trade.